Okay, this is Chapter 10, Video 2 for Financial Accounting. We're going to talk about payroll liabilities. So payroll, we're talking about obviously paying wages. We're going to talk a little bit about how wages are paid, how withholding works, how there's employee and employer sides to kind of both, some taxes are paid by both the employee and the employer, some taxes are just paid by the employer, and some taxes are just paid by the employee. So the first thing I want you to notice is at the bottom of 481 when they talk about pay, there's always a if there's an hourly rate. Generally speaking, if there's an hourly rate, most people are paid at time and a half, and there are laws regarding this. Most people are paid at time and a half if they work over 40 hours per week. So you can see kind of a simple calculation they've done down there where we have an employee who makes $34 per hour. They worked 42 hours in the week, in this particular week. So 40 hours would be at the $34 per hour rate. And the remaining 2 hours would be at 34 times 1.5, which is $51 per hour. Additional $102. So the total pay, and this would be the gross pay for this employee, would be $1,360 plus 102, which is $1,462. Gross pay is also an important definition to know. Gross pay would be if there was no taxes or anything taken out of your paycheck, what would you actually bring home? That's what gross pay is. So gross pay is that. Net pay will be after we do all of our deductions. So the first thing it talks about, which we don't go into great detail in this chapter because it just gets to be pretty complicated, is income taxes. So you fill out a W-4 for your income taxes, and that tells the employer about approximately how much to withhold from your paycheck. Now realize when they withhold these from your paycheck, they pay them on your behalf to the government. This is not something that the company keeps. This is something that the company takes out of your check and then pays to someone else. So it's not any sort of positive effect for the company at all. Instead, it's just something they have to take care of. It's just kind of a business they have to do. The other types of taxes it starts talking about next is FICA taxes. So FICA taxes include Social Security, Social Security taxes, and Medicare taxes. So Social Security is a tax that's taken out of your paycheck and paid to the federal government that is supposed to be money that you can get to when you retire. Supposed to be money for your retirement. And then Medicare is also for senior citizens or for retirees, and that is to help cover the cost of health insurance. So they're kind of simplifying in this book, and that's okay for our purposes. And they said that Social Security is 6% on all earnings, which technically actually it isn't on all earnings. After you reach a certain amount, it stops. But for our purposes, we'll just use what the book says. And then Medicare was 1.5% on all earnings. So those are two different things that we will take out of a paycheck. So for this employee, this John McGrath is his name, we can figure out how much is going to be subject to Social Security and how much is going to be subject to Medicare. All we have to do is take the 1,462 times the 6% for Social Security taxes and the 1,462 times the 1.5% for Medicare taxes, and now we know that we will withhold a total of, for those two, for FICA specifically, a total of $109.65. So there's also federal income tax that they withheld, which they have in here as $257.95. We didn't go through the calculation of that, so they do make assumptions, and they'll do the same thing in the back of the chapter for you. The important part here is when I have other deductions. So we've got our gross pay, and I've got $109.65. That's the FICA. And then we have the federal income tax. In this case, it's a given number, $257.95. And then we have this retirement savings, which is voluntary, that does come out before taxes. So it's $20 withholding. And then he has something that he gives to charity called the United Fund for $5. So his total withholdings would be total withholdings, would just simply be the sum of all those numbers, which is $392.60. Okay, in total. That means his net pay would be the $1,462 minus the $392.60, gets me $1,069.40. So what does this look like from a journal entry perspective? You know, how would I journalize this? Well, the answer is generally I wouldn't generalize just one individual, but I will show you, I don't think it shows you in the book specifically, but how you would journalize just this one individual. Usually what you'd have instead is a whole group. You'd run your payroll and you do one journal entry for everybody that you're paying on payroll. But just to kind of make this clear, I've always kind of like to show you what it looked like just for the one individual. So if I had a paycheck just for this one person, it would depend on what his expense, whether he was sales, whether he was office. Let's say he was sales, so sales salaries expense would be the full gross amount of $1,462, and then we would have Social Security tax payable. And it's a payable because while it's withheld from the check, it's not remitted immediately. So it's as soon as I withhold it, as soon as the company withholds it from the employee's paycheck, it is owed to the federal government. So we book it immediately as a liability to show that it is not our money, it is immediately a liability to the federal government. In this case, Social Security was $87.72. Medicare tax payable is $21.93. And like I said, the book did this for a group of people rather than one. I'm showing you what it looks like for just one. Federal income tax payable at $257.95, which was a given number. Retirement contributions payable. The $20. Could run out of space here. Move some things down. Retirement contributions payable, and then I have charitable contributions payable for $5. And the reason why I wanted to show you an individual one is because now you can kind of see, I think it's a little easier to see that I don't balance here, but what I don't balance out is basically what I'm actually going to write the paycheck for. So I book a liability for now until I actually physically write the paychecks to show what the net amount is. So I got $1,462 over here, and I got a total of $392.60. So the net amount is the salaries payable for this one person is $1,462 minus $392.60, or I could just reference it here, the net pay, and I should balance. This should equal $1,462, and it does. So that would be just an individual journal entry for one person, even though, like I said, we do usually do it in group. And this is what I would call the employee side, because this is the money that's actually going to go to the employee, and this is all the money that is withheld from the employee's paycheck and paid to other organizations on their behalf. The next video, I'm going to do the employer side, because there's other elements to that that are a little bit different. So we'll look at the employer side and see what that looks like. They have payroll taxes as well.